We're going to try and bring this to an end at 1:45 so that you guys can go through all the exciting news coming up. There's a lot of really fantastic things, including SAS North, which we're looking forward to getting you all to this year. And so watch out for more details at the end of this. But this is a great session. I enjoyed it last year, and it was Chelsea, Jennifer, and I last year again. So hopefully, we're second time around, we're even better. But we had a great time doing it with the founders last year, and looking forward to doing it with you now. Jennifer, and Chelsea. So I'm going to just I'll let Chelsea introduce herself more, because Jennifer and I, and Chelsea, can you just intro yourself, and before we get into the details of later on?
Yeah. Hi, everyone. Nice to meet you. I'm Chelsea, principal of Fund 1 and Fund 2 at the 51. It's great to kind of be on the call with Sheboot and get to know you all a little bit better. Definitely some familiar faces on this call too. So looking forward to it. Thanks for having me.
Thanks for joining us. It's really nice to see Sheboot, the 51, work together on these. Shelley was here on Tuesday as part of the panel, and now we get to Chelsea today. So that's fabulous. The overview today is going to be pretty heavy at the beginning with slideware, but we're going to break out and spend a full hour in 4 different breakout rooms at the end. And where Chelsea's going to run one, Jennifer is going to run another, and I'll run the third, and we'll rotate us through different questions. So we're going to talk a little bit about the deal flow and stages, and get into that at the beginning. We'll talk again about the barriers that women's founders face. But we're really going to spend the bulk of our time talking about difficult questions and how to address them, and then practice. We'll have some time for you to ask some questions before we jump into the breakout room. So and don't worry, we've built breaks in again too. So and we'll make sure that we have a couple of breaks so we can step away from the computer screens for a little bit. Okay, and I'm going to have Jennifer kick things off here.
Great. So good morning / good afternoon, everyone. So I just wanted to kick off with a little bit about the deal process. This is really just a follow on from the session we did on Tuesday on pitching to angels and VCs. So we talked a little bit, and some of the Q&A on Tuesday was about that screening process and how to get in front of the investors. So that's generally the first stage of the process. You do the pitch to capture interest in the investment. Pitches are usually 10 to 15 minutes with some Q&A. It varies from investor to investor, but that's generally the time frame. You then move into a deep dive meeting. So investors that you have intrigued with your pitch will then want to know more. The deep dive meeting is typically more of a 2-hour, varies a little bit, but 1.5 hours to 2 hours, going into more detail about your pitch and your business to confirm interest and potential investment level. You then generally get sort of a soft circled, yeah, I'm interested, maybe even a number. I'm potentially interested for 25K. I'm potentially interested for 100K or $1 million or whatever it is. And then you move into the due diligence process, going through the data room, confirming assumptions that the investors have made based on your pitch and your deep dive. And then if all of that goes well, you move into the close, complete the paperwork and the money transfer. So what we're going to be talking about today is the types of questions you get primarily in that pitch, deep dive, due diligence segments of the process. Okay.
And you will notice some angel groups do it differently. Some angel groups, actually want to get into into doing some due diligence before the deep dive. And actually get access to your data room. So there's slight differences between the angel groups themselves. Chelsea, I'm going to have you.
Yeah, and I'll maybe just to the other slide too, talk a little bit about a couple pieces that might be slightly different at the 51, but overall the process is very much the same. But maybe first before that, for those of you that don't know the 51, we're an early stage venture capital business. We invest in women-led companies. And for us, that means you identify as a woman or gender diverse, and you have an equitable position on the cap table. So that's for our Fund 1 and Fund 2. We also have a dedicated food and agriculture fund with a little bit of a different criteria there, where they're investing in women and diverse founders, given the more narrow focus of their fund. But overall, in just around 3 years, we've done a lot, now into 3 funds, invested in up to 35 companies across the 3 funds, and have really looked at a lot of ventures. So you'll see there, we've gone from like 2,300 to 35 investments. And I would just say, like, within this due diligence process and how we typically meet and get to know our founders is, sometimes those companies we're tracking is, companies we're having touch bases with. Maybe I met them a year ago and I want to kind of see what's new and what's happening with them. So I would say there's some like circling within this funnel, as we'll meet founders more than once for sure, and want to kind of continue along the journey of their business as they're growing too. On top of that, with the fund, like Fund 1 and Fund 2, we're really looking for companies that are B2B SaaS focused, about half of our portfolio there. We're looking for companies that are maybe trying to advance the future of work. We're looking for any companies that are trying to advance the nation's path to net zero, and health and wellness as well too, for especially given women and our bodies that are often overlooked in funding. So those are a couple of the areas we're kind of interested in too, but excited to kind of take you through and get to know you and build out some of this practice through the session later today. We meet with ventures across Canada and in the US. And yeah, that's the funnest part of my job, is just getting to meet a ton of founders and see what's interesting and happening out there. So
question for you, Chelsea. Do you automatically like sort of earmark, I should go back and talk to them in 6 months and sort of put it in your date calendar somewhere? I mean, or
yeah, I usually send myself an email like, oh, catch up with this person. But yeah, other times it's sometimes an outreach from a founder again, hey, we have a new round opening, or so both ways. But yeah. The other part I would say is out of like the process, kind of how it works. Like, we want to be one of the early conversations with founders. So sometimes we might meet a founder, it might be a little early, but we do want to kind of like help you figure out like venture capital in the process. So we're always open, and we're always looking for cold intros, warm intros, meeting lots of founders too. So through the process, I would say Rachel, our analyst, sometimes she'll take some of the cold emails, and then I'll jump on maybe a second call. If it's a round that's closing really fast, our GPs, Judy and Shelley, they might be on some of the first calls. So depending on kind of where you come into our process, sometimes we'll have like multiple pitch meetings prior to kind of getting to that deep dive. So that's something that's maybe a little bit different. And the other thing slightly different about our process is we'll get a pitch and kind of really whatever the founder is comfortable with sharing. We use a platform called Diligence, where you're kind of entering like problem, solution, your pitch deck, more about your team and your market to whatever your comfort level is. We don't expect founders to kind of fill everything out, but it gives us an idea to really hone into that initial conversation, where our gaps of understanding are in your business. And then we can kind of shape the conversation around that to just really be as efficient with our time. Typically, our first meetings are about half an hour. And again, same when we have like a GP for our first call. It's hard to kind of get a 2-hour block in our GP's calendar. So those would be a couple that are slightly different. And I know other funds will have an investment committee. We have what we call a GPAC, a General Partner Advisory Committee, and that meets once a month. And the process there is we're really trying to get external feedback from our advisors and our investors on our investments. So those meetings are kind of set, and ultimately before we make an investment, we do want like a company to go through and have that meeting typically too.
Great.
And I just want to mention on DLM, that DLM is also what most of the Ontario angel groups have standardized on. So it makes it very easy if you're applying to multiple groups using DLM.
How many people have been on DLM already? Okay, so you got an idea of it. Making me raise my hand. Okay. Are you okay? The other thing I'm going to say right away right now, if you could put my hand down again, Katie, is like Code said on Tuesday, rename your screen names. Atina, Amy, put your company name in there. Okay, you've got a VC in the room. Make sure they know your company name. And great little Code provided. Remember, he looked up all the companies while he was waiting for the next question. Okay, thank you so much, Chelsea. And we'll jump back and we'll make sure that you get some more time and questions with Chelsea, but I'm going to move ahead. And Jennifer.
Yeah, so just, this is part of the reason why we have SheBoot. So the fact is, it's much harder as a woman to raise money. Women founders in 2022 raised less than 2% of VC funding. This was actually the lowest percentage in 5 years. We'll talk a little bit about some of the headwinds, and this session is about overcoming those. So we're going to be talking about how to get past some of those. Part of what happened in downturns, VCs frequently double down on the companies they already have in their portfolio, and they're doing follow-on rounds which were bigger than the original rounds. So that's what leads to this kind of condition. We are seeing some signals in 2023 that earlier rounds are happening again. So there might be a bit of a shift this year, but this has been an ongoing problem in terms of women-led founders, which is why it's so exciting that the 51 not only has Fund 1, but now has Fund 2. And we're seeing more money going into those sorts of funds. So we do expect change to happen slowly.
Chelsea. You're on mute, Chelsea.
There we go. So this is just talking about why are we interested in the opportunity? It's not just a nice thing for us to invest in women. We do think there is a substantial financial opportunity that's often overlooked by a lot of funds. We know that women are twice as likely on the VC side, if you have a principal decision maker on your team, to invest in these female founded teams. And we see higher revenue growth and founders typically that are women identifying doing more with less. So exiting quicker sometimes, and having up to as much as 2 times per dollar invested in revenue growth. So yeah, there's a huge opportunity, and I think not enough investment in the space.
Oh, sorry. And I don't know, Jennifer, I think Jennifer. Yeah. Gotta keep track of 2 screens. Jennifer, you're on mute.
I think after all these years. Okay. So the net of this is there are some challenges for women founders. So we're going to walk through some of those. So I think if you just go to the next slide, we can talk about some of the barriers that are out there. And we have discussed, some aspects of them already. One is that boys club. So VCs, and I think Code was pretty clear that, at Mistral, no, the nenext slide was great. Mistral gets all of their deal flow with warm introductions, that they don't even open the cold emails. And Rhiannon and Sandpiper said they open the cold emails, but all of the deals that they've closed have been ones that have come in from warm intros. So that network is super important. And because the VC industry is so male, that network tends to be male. So one of the things that you need to really work on as you go through that fundraising is building up that network so you can get those warm introductions to get through that boys club kind of aspect of funding. A second issue is pattern matching habits. So I tend to invest in what I was successful in before. So I look for things like what I invested in before, which is, makes it change becomes very difficult when everyone is trying to replicate their previous successes. And we'll talk a little bit about how to position yourself so that you sound more like the things that they've been successful with in the past. Another aspect is many women founders, not all of you, but many women founders are not the technical founder. And for women founders, that becomes more of a barrier to fundraising than a non-technical male founder. So working on making sure you've got that ability to answer the technical questions that we'll talk about today is also important. Women are judged more on past performance. Men, they're more optimistic about potential for the future. And we'll talk a little bit of that as well. And, as a result, women also get asked different questions. So women are more likely to be asked questions about risk as opposed to questions about opportunity. So the questions tend to be phrased differently. So you have to think about how you answer questions to avoid getting into the trap of making things sound smaller or riskier than they actually are.
And that's a big part of today. So we're coming back to that.
Yeah. And this is, part of that pattern matching thing. Only it's improved a little bit over the years, but we're still only at about 15% of decision makers at VC firms are women. And only about 2.4% are founding partners. And for the larger the fund, the more likely it is to be male. So there are now many women-led funds, but they are generally not the billion-dollar funds. So it just makes it a little skewed as to where the money goes.
I would just add maybe just like a little data point to that is when I'm going to say like a venture capital conference where it's like more VC focused versus maybe founder focused, you look out and it's just like a sea of suits. And I was an engineer previously, so used to working with a lot of men, but I don't see it obviously at the 51. But when you're in a broader ecosystem, you're like, yeah, there's a lot of guys here.
Yeah, it changes things. Are you expecting Banff to be like that too? Yeah. Excellent. And then Chelsea, headwinds.
Yeah, so there's a lot happening. I don't know if many of you are reading the news about Fearless Founders and the lawsuit that's happening. It was a company that was giving out grants to Black founders and had a legal lawsuit against them that I'm just going to find the link here to pass it. There might be a better link, but this is the one I had up too. It's a long one. But people are appealing this, saying that, there needs to be capital to everyone, where in reality, it's just even smaller than women founders is what goes to Black founders. So it's kind of crazy that somebody's saying that like, hey, this isn't right and it's violating the Civil Rights Act, promoting racial discrimination. So it's really kind of sad to see what happened there, but it's hopefully we'll go and kind of continue up the appeals courts in the States, but lots of other anti kind of DEI lawsuits happening in America too. So it's just something to be aware of, that there's like this anti woke movement kind of happening at the same time when there really, really should be a lot of work going the other direction. On top of that, in VC, there's, a lot of economic uncertainty. If you look at like long rate, bond rates are way high now. So it's like the potential that you need your VC fund to meet with that added risk onto it. There's definitely pressure that way. And there's a lot of firms that started investing in late 2021 and onward. And if you're looking at the time frame of their companies needing to have exits so they can give their LPs money back, there's definitely a pressure on a lot of funds in North America being able to have these exits and have liquidity back into their funds to reinvest in, say, the next batch of founders. And the main driving force there is there's way less IPOs that have happened. And it's a lot more challenging to get to this later stage investment, Series A, sometimes B on. So yeah, less it's a difficult venture state right now. We're seeing the bar kind of continually increase for founders, but still, yeah, some opportunities that are happening. And maybe if you want to jump to the next slide too. This data is just from CVCA. So put the link in the chat so you guys can dig into it. They have like quarterly reports that come out, and really it's a great place to go to and look and be like, what's happening in Canada in venture. And what we're seeing right now in Canada specifically for pre-seed and seed investments is it is taking up the majority of transactions in Canada. There's growth that's happened provincially in most provinces, and what we're seeing is that there might be fewer deals happening sometimes, but they're bigger checks that are going to these companies to give them longer runways and support their growth. So I think sometimes getting that lead can be really challenging, but those that do and have that momentum in their fundraising, there is a strong opportunity ahead of them. And then, yeah, it's just highlighting some of the graphs here, and maybe you can spend some time on those too. But the blue line is like the number of deals that happened on pre-seed on the left and seed on the right in green, and then the total size and value of the deals are in the bars. So it's there's still a lot of opportunity here and dollars going into early stage companies. It's just challenging. If you're looking at those reports later on, you'll see there's definitely larger drops on the later stage, which eventually will kind of trickle down.
But when you look at this, Chelsea, though, it's better than it sounds, right? Is really what it comes down to. So, that's the glass half full kind of part of this. We hear a lot of concerns, but I mean, it's better than it sounds when you look at the actual stats, especially in this pre-seed round.
Yeah.
Okay, great. Anything you want to add, Jennifer?
No, I think I guess the only thing to take away is that it is difficult, but it is not hopeless. So it's really being aware of the environment that you're walking into and having the tools in your toolkit to be able to overcome that and raise investment. And there have been some very successful fundraisers in Canada. Joanna Griffiths from Nick's successfully fundraised, had a fabulous exit. So it can be done. You just need to be aware of what you're walking into.
Awesome.
Excellent. So moving into the sort of questions part of this, and a couple of things we know is that based on some studies that have been done, is 67% of the questions posed to male entrepreneurs were promotion oriented, and we'll get into a little bit more of that. But whereas the 66% of the questions posed to women entrepreneurs were prevention oriented. That is getting into, what's the risk versus what's the growth potential. So promotions about growth potential and preventions about, how are you going to minimize all the risks. What does that mean? Well, when we're looking at similar companies, what we're seeing is that research actually shows that entrepreneurs who answered more promotion-based questions raised 7 times more than those that fielded the prevention-based questions. And so, that the whole premise of what we're getting into now is learning to take a prevention question and turn it into a promotion answer. And try and use some tricks along the way to essentially change the situation that you're in. But to date, you can see that this is a clear gender bias against women seeking funding. Why? I don't think we know the why of this is happening, but it is, and so we're here to prepare you for the reality out there. We can't necessarily change the reality, but we can help you be more prepared for that reality. So Jennifer, handing off to you.
Yeah, so what we're going to talk about here is how we can overcome these barriers. And, you're not going to control the questions that you're asked, but you can control the way you handle them, which is what we're going to focus on in this session. And while you can raise rounds entirely from women funders, just so much of the money is in the hands of mixed or male investing groups that you're likely to have to deal with, some male investors as you go through your fundraising journey. So, we'll go through what you can do to do that. So the next slide. So how do you do that? So you're going to get a prevention question. Everyone gets them. You probably have had them already in the pitch practices or in other pitches that you've done. And what happens with many people is your inclination is to answer the question as asked. So if you're asked, how are you going to handle this? It sounds like there's a lot of competitors. Aren't you just going to get crushed by your competitors? And the tendency would be to then talk about the competitors and try and answer something very specific that winds up not really increasing the size of your opportunity in the mind of the investor, right? So when you get those sorts of questions, you want to turn around and acknowledge the question as asked, but answer it as though it had been a promotion question, right? What's your strategy to win the market, as opposed to why aren't you going to get crushed by your competitors, right? And you will find, that's an example of the questions that are actually asking the same thing in some respects, right? So if you think about when you get the question about why aren't you going to get crushed, answer it with your strategy to win the market. So that you're giving that expansive answer on growth as opposed to that risk answer on staying alive, sort of thing.
So at this point, raise your hands, and we're just going to do a little rapid fire, and I'd like to hear your answers to a couple of questions we're going to pose right now. I think Jennifer, you're posing the first one. Is that right? Yep.
Yeah. So who's got their hand up?
I don't think sure. Sophia, right? You're going to do it that way? Okay,
yeah.
Sophia's going to answer this one.
Sure. I'll try.
Okay, so we've written these questions in a fairly generic way because we're not sure which company is going to answer which question. But my question is, so how do you plan to defend your market share given how competitive the landscape is?
Yeah, I think our competitive advantage is that we're innovating in the ingredient space. So we'll be first to market with some of the novel ingredients in our pet food products. How's that?
I liked how succinct it was, actually.
Okay.
It's better to be succinct in my mind rather than longer, but did she turn it around enough for you, Jennifer?
So the only thing I might add to that is, that being first to market and you've got a marketing plan to be able to get there and capture share quickly, or something around capturing share versus just getting the product ready.
Yeah. Good.
You could even weave in slightly, like if you haven't talked about it, how big is the market? If it's perceived maybe as a busier space still, even if I have X% of it, this still means my business could be this big. So to show that there could be room for more than one person too.
Excellent.
Okay.
Sarge, do you want to answer the question for us then next?
Yes, especially since I am in a very competitive landscape.
Excellent.
My answer to that would be the market is huge. We're talking a multi-trillion-dollar market. Even a 1% investment or 1% interest for us is massive. But having said that, our software is heads and shoulders above everybody else's. For example, last month, 98% of the people who registered on our platform were by word of mouth, which tells you that we are sticking with our client base.
I'd like to say that our customer base is sticky. Just say it comes across a little cleaner, but
Okay.
yeah. But I love the term sticky as well when it comes to the SaaS platforms. You want that type of retention. But
yeah, and I would, yeah. So you've got the retention. I might phrase it slightly because you're retaining your customer base, and they're telling their friends. So you've got both a sticky customer base and a customer base that's promoting for you.
Yeah. Nice.
So saying that 98% of our client add-ons last quarter were by word of mouth is not clean enough.
So it was relating that your sticky customers are also promotional.
Okay.
Right. So they're both sticky and they're promotional. So you're expanding your business within your existing customers, and your existing customers are helping you grow your customer base.
Okay. Thank you.
Hey, Al, you were up for a second and then went away. Do you still have a question, or going to answer the question?
Yeah, I just wanted to make the comment that this question is so relevant to us because we are in a competitive market space, and which is busy. And typically I do rely on how the market itself is certain $1 billion and growing at 15% CAGR, trying to say that there's space for everyone, and then leverage some of my previous successes of the company, saying we've grown 300% year over year, trying to say that we are getting accepted.
I like the 300% year over year. That's a very nice stat to bring out at that point. Yeah, absolutely. Yeah. Okay, thank you, Payal. Yashel, are you going to try the question too, or we've got a couple more questions, or are you commenting?
Oh, I have a quick question with regards to this. So I know the question is more about market share, but would this be a good time to bring up IP strategy, or is that going to just be confusing?
Well, and IP is an important part of maintaining your competitive moat, right? And I value patents quite a bit, so because they do provide a good step ahead from your competition if they're significant enough. But so yes, but it's more about. So it does prove that you've thought through and you've done something to protect your self and in this competitive landscape.
Yeah, the only thing I would say, generally, as Julia said earlier, you want to keep your answers relatively short. You don't necessarily want to get into answering questions that they may not have thought of yet. Because it can lead to more things. So saying, as I've already explained, I have a patent strategy and unique differentiation in this market. It is a large and growing market. Yes, there are a lot of players, but with my differentiation and my go-to-market, I'm growing 300%, as I've found an area of the market that I uniquely address, blah, blah, blah. But I wouldn't go into a whole, here's my patent strategy. Hopefully, if your patent strategy is differentiating, then that should have been in your pitch, and you're just referencing back to that as to why you're uniquely able to grow. Sometimes people in answering questions talk for a long time about something that could have been handled much faster, which means either you run out of time for other questions or you raise flags in people's heads that you didn't mean to. Okay. So succinct is always useful.
Yeah, I totally agree with referring to the patent strategy, but definitely the patent at least. Okay, I'm going to move forward into the next question, and Chelsea, you're going to take this one, please.
So this next question, if you were asked, what is your customer retention strategy? Anyone want to take a crack on how they can kind of turn that more promotional in your answer?
I can give a crack to it. So our retention strategy is actually to create like an affiliate program where we create personalized promos for our professional artists. So they get a kickback to every referral that they give us.
Yeah, so I would say some of that is like building your top of your funnel too, but out of customers that are already there, it's like, how do they get first in class service? Maybe if you have a really low like churn of somebody that is in your business, highlight that, and maybe it's above average. You could also talk to, yeah, how are we like building that top of the funnel is great too. But anything you can add, like crunchy is good. And then if you have any early data on the customers you already have, are they repeat customers? Do they make up 30% of your total revenue? Something like that you could throw in as well.
Yeah, so you're adding in that top of funnel, acquiring more customers, not just retaining customers, just so you get both of those in at the same time. Yeah.
And that's the part that you want to turn around in this question, because you don't want to leave it as your business is kind of where it is and it's hanging on to the customers. That's the most important thing. You want to always keep coming back to that opportunity for growth.
Okay, thank you, Rana, for jumping on that one. I'm just gonna go to the next one. And looking for volunteers for this one. How long will it take you to break even? Amy.
For us, with a $5 million investment into the company and based on prospective customers that we already are in contact with us, it will take us 3 years to break even with our current revenue model and pricing strategy.
And that's a great answer. You answered the question directly. I'm going to challenge you to not answer it completely directly, but now turn it into more of a promotional answer. You know what I'm getting at?
Sorry?
Well, you answered my question.
Yeah, directly.
And that was great. But it's break even isn't necessarily that important to many investors. It's your growth. And so how can you turn that upside down a little bit and talk about that growth?
After we sell our product using an edge device to prospective hospital customers that we have identified, we'll then move into a licensing strategy where we can scale our software at no cost to the large OEMs by integrating our software on their third-party platforms.
Okay, so you're talking about the growth beyond break even, essentially at that point, right? You're trying to you point out that that it doesn't stop there. You're going to keep growing. Sophia, you want to challenge that one? Thank you, Amy.
I just had a quick question about this because like one of the issues that I have is that most of the answers for me is like, it depends. And in this case, for example, like how I think about this, it depends on whether we continue as is or if we get investment and are able to invest in these activities. So the question is, should I even mention that, or just break even in this context would mean if they give me the investment or if I get the investment that I'm looking for?
Yeah. What do you think a man would do? I'm going to throw that at you.
They would assume that is with the investment, and yeah, okay. So
it's the fullest way of going. I mean, but I'll to just make that assumption. But Jennifer and Chelsea, what do you think?
Yeah, I think like as a founder, having optionality in your business is a great thing, but I think that's probably not what you want to lead with. Like when you say, oh, if we don't raise the round, then it puts like they're having trouble raising a round in somebody's head, whereas like you just assume that, yes, that's the way we're going. And these are all the great things I'm able to do with that capital.
Okay, thank you.
So another thing you could do here, is refer back to the unit economics of your business. So with the unit economics of my business, I can profitably, I am profitable on a customer basis. But I believe that there is huge growth potential in this market. So I am fundraising so we can grow. And I do expect, as I raise this round, I'm going to be going for a Series A and a Series B in order to fully capture the market opportunity with per unit customer margin to allow for profitability when I have, sufficient market penetration or something. I'm off the cuff there a little bit, but think about your
that's
answer
great.
around that you have a path to profitability, but you want to grow.
Yeah, exactly. Okay.
Yeah.
Okay, that's great. Thank you.
Excellent. Okay, I'm going to jump ahead. Jennifer.
So what is your execution plan to prevent losses in your business?
I want to respond to that question. Somebody hasn't yet. Sylvia, come on. I hear smiled. I saw a smile, Sylvia. And,
yeah, I'm not sure. I'm thinking about it. I have not had that question before yet.
okay.
And I feel like I would first ask, like, when it's losses, to prevent losses, I would seek clarification.
Okay. Anybody else? There's no right or wrong answers here, too. Yeah, Payal, please.
I mean, it's a tough question. I'll just try and get a stab at it. So here I would talk about, while there are some identified risks that we have, but we have a strategy in terms of our growth with regards to constantly building our product modules and upselling to our customers while also expanding to newer markets. So considering the market is growing overall, we expect our growth to be at a certain percentage, let's say.
Okay. Jennifer, you gonna comment on that at all, or?
Yeah, I think, that's good. I think if you think about what the opposite side of this, it tends to be, so in looking at this, it's, what does success look like might be another sort of an opposite view of this. So this is really saying, how are you preventing failure? Versus how, what does success look like? So that's another way to look at why you get asked a question like this. They're looking for, what are you doing to stop me from losing all my money? How are you preventing failure? And this is a question that generally doesn't get asked to male founders.
It's hard to transition from that question, what is your execution plan to prevent losses, to success. I mean, it's you can't just slap them in the face and say, well, I'm going to ignore your question and talk about success. You have to say something in between, Jennifer. So what do you say in between that sort of addresses it?
Yeah, I mean, you can bring up things like the metrics that you're tracking along the way so that you can track how the business is going and recalibrate before you get into a loss situation. And let me talk about those metrics, because those are, and which actually leads into the next question, but how that, my goal is to be successful as a company. These are the things that I'm tracking, and these are my decision-making points to avoid losses. And in order to be able to hit the outcome I'm planning for.
One thing I would maybe add too is like weaving into like what are the next stage like milestones you want to achieve. But maybe for instance, you could also put a piece in there. Say you're selling maybe omni-channel and you have one big client on wholesale. That could be a risk in your business, in that if that wholesale for some reason doesn't reorder, you might have less. That's a big portion of your revenue, for instance. Maybe you could say like, my plan to get to Series A is to add X number of wholesale accounts. It's going to grow my revenue by this much, and stabilize like this portion of risk. So maybe you could like weave something like that in.
Yeah, okay, I like it. Okay, thank you. Michelle, and then Clara, and then I think we're going to move on. Okay, go ahead, Michelle.
I just again have a question about this. So for example, if I have a risk mitigation slide in my pitch deck, So talking about the risk mitigation slide and bringing that up, would that be answering the question, or would that be a successful turnaround of the question itself? I'm not sure.
I see it as answering the question as well there, but if you, I mean, you could say, yes, we thought about these things, and so here they are, but our focus is on this growth potential, right? It actually establishes that, yeah, you thought about it, you're done, and let me point you towards the bigger potential in the future. That's but not to analyze that slide, I think would be going down where they want you to go rather than taking it somewhere else. Is that fair?
Thank you.
Yeah, I mean, you really want your investors or potential investors to be focused on the opportunity, not the risk. I mean, inherently, all startups have risk. That's why, most VCs make most of their profit off of 1 or 2 out of 10 in their portfolio. So if you're in the space, you kind of know that there's risk. So as a founder, you need to get everyone to buy into that opportunity that you have in front of you, and that you are aware, like, that you're not naive, that there's no competition, because that's not credible either. I've had founders pitch that there's no competitors. There's always something. There's the do nothing competitor. There's the active competitors. There's always something.
Well, it's almost a challenge to investors to find one. As soon as you say you have one, I can see them tapping on their searching for one sometimes. So
yeah, they're off in Google. There's got to be something out there.
Gotta be someone.
Or they decide that it's because there's no market. That's why there's no competitors. It's because there's no market. Yeah, so you don't want to be naive about no competitors or no risk, but you want to focus on growth and opportunity and how you're going to make money.
Excellent. Sorry, I lost you. It was Amy. No, who was up when they hand up a second ago?
I had my hand up. Yeah, I had my hand up, but I think you guys probably answered it, because I was going to ask if you could take the approach more from like a market standpoint, and talk about how going to market with some of the customers that you have relationships with in market segment that's relatively small, like, for example, ice hockey, before moving into larger markets, like soccer and larger jurisdictions, once you establish that, product market fit. I don't know if that would be an okay approach to take.
Chelsea, do you want to respond to that, or?
Yeah, I think, having like that weaved in, I do like that. It's able to kind of have this proof point, but then, trying to tamper any like nervousness that might be on the next step or the next growth. I think leaving any kind of like future potential or early conversations with somebody maybe could be a good spot to add that too.
Okay, thank you.
Atena, I think last question, and then we'll move on. Go ahead.
I'm sorry. I want to add this, and now is the right place to add that we're having other products in our pipeline that may add unique features to the product that we already have, and this may prevent losses, for example. This is the right play to mention that, or no?
It is, but I would still be succinct, because it's possible to, and it's going to come up a little bit when during the breakout rooms, but it's possible to just confuse as well. Yeah. With all the changes in your product. So yes, it continues to be a focus of ours. We continue to develop the product to ensure that we stay ahead of the competition and maintain our market share. How's that sound?
Yeah. Perfect. Thank you.
Okay, I'm gonna skip the last question, I think, because it does overlap a little bit with what we just talked about, and then jump into a little bit more about the deep dive and due diligence process and looking at it from another angle, and so that we can then switch off and get into our breakout rooms. And I'll take the lead on this. One of the things that I get asked a lot from Capital Angel Network and is what happens in the deep dive. So timing wise, one more time, at Capital Angel Network, you do your pitch at a members meeting after getting through the selection process. And a bunch of members say, yeah, I'm interested in hearing more. And they get brought together and with you in and that sounds really simple, but it's a lot of work just getting everybody together for this deep dive, which is typically at least an hour and a half, but 4 to 2 hours. And it's our chance to get well beyond that 15 minutes of questions that we might have had, and ask some more important questions, deeper questions, which is why it's a deep dive, and trying to understand, and this is the flow that we typically use, but they can bounce around as well, starting with team questions. Who is the team beyond yourself? This is an opportunity now to bring team members into a deep dive as well too, and that is it's great for them to get to know other members of your group. They'll then getting a little bit more about the product and the value proposition and development stages of your product, more information on the market opportunity, business model. And then we go pretty deep in this barriers to entry. And this is when, we might spend 15 minutes on let's say just patent related, if that's part of your strategy around that. And how you're getting to market with this market entry, and then finally clarifying the ask, and what the funds will be used for. All of this might have been in your deck, but we only got a chance to ask so many questions during that 15 minutes after your pitch, and this gives us an opportunity to expand on those answers and go deeper on the particular questions involved. One of the things that are major components that I'm going to talk about in my breakout room will be around technology, product roadmap, IP strategy, but valuation and financials are things that are going to come into it as well too. I'm not going to go into those as much, but at some point during the deep dive, you may get answered. You may be asked, what's your cap? And it's something that you're going to need to answer. I don't think that we have it in either of the other breakout rooms, so I'll make sure we talk about it a little bit in mine. The other one is this technology readiness level. How many people have heard of this already? I'm just curious. Okay, so about half the room. Can you put my hand down again, Katie? Paya, question? Oh, no, that was just you putting your hand up too.
No, sorry, that was a delayed reaction.
I know. I got to stop putting my hand up all the time. It's not used. I'd say it's used half the time. Maybe even not half, but it is a language that people are familiar with, and you should be familiar with, right? I think it will depend on the angel group you go to, and it's pretty straightforward. There's nothing rocket science about it, but it does. It's a short form language that is worth knowing, and so that you can recognize what an investor is asking and be able to answer it. They're going to hope, and depending on what industry you're in, they're going to have an expectation that you're at different levels. So, if in fact you're a SaaS company, they're going to hope that you're really past this validation phase. You're starting to get some good traction, and in maybe TR8. But if you're an electronics company, it can certainly be that you've got a first prototype, and we've seen that with some of the clean tech as well, examples that we've seen, and that those are levels for that particular sector that would be okay for that first investment. There is a business readiness level. I haven't seen this talked about much, but it does provide another sort of gradient for investors to talk through. I don't know, Chelsea, Jennifer, do you see this used at all? No.
I don't see it used often.
Yeah.
No.
Yeah, so that was mainly for me to say, you know, the technology one I think is good. The other is just know about it, but it's not as important.
Yeah, just one thing to note, some angel groups, possibly some of the VCs will use MBAs. And they tend to have more of these checklist type things if it's an MBA student that's helping out with the process.
MBA. So I was going like, what checklist is that?
Yeah, not sorry.
Yeah,
people doing their MBA.
Yeah.
You know, so someone who has their MBA but is in business for 20 years is not likely to do this. But if they're using an MBA intern, you do sometimes get this kind of checklist fresh off of their professor's course.
Yeah.
So
I think I'm doing the slide too, so I'm trying to keep track of two different things at once. But yeah, I'll finish off here, and you know, let's just open up the discussion. And maybe I'm going to try a show of hands. How many of you believe that a founder should fully understand their financial forecast and be able to talk through how that was built and to an investor? Hands up. Yeah, okay, great. How many of you feel that you should be able to talk through the technical product roadmap for the next 3 years? Okay. Okay. I'm taking that as majority. At what and I'm going to throw out, then I'll turn it upside down and say what is a founder? Okay, I have one more because it's another good example. So how many think that you should fully understand the investment ask and vehicle, as in the paperwork behind that ask? Okay, lower number there. Okay, okay. And I mean the detail of the crypto work. I might have gone a little far there, but you should know the difference between a safe and a convertible note, and you should know terms a little bit. You don't need to know everything legalese in your convertible note, but it is good that you have an overview understanding and can talk to an investor about it. Anybody want to throw out something that a founder doesn't need to know?
In one of the discussions that I had with the VC recently, they asked if I had a term sheet. And while I knew what a term sheet was, I didn't have one. So I said, I don't have one. I don't know if we should have one and know about it, or if that's the answer that's acceptable.
I mean, the term sheet is usually, and correct me if I'm wrong, Chelsea or Jennifer, but term sheet is usually provided by a VC, and if you don't have a lead, then you don't have a term sheet. Angels tend to sort of work in groups and figure out a vehicle for investment. I don't call a term sheet, to me, a term sheet is not a safe or a convertible note. It's an investment vehicle. A term sheet is, if in fact we will invest this way, and it's a 2-page document, a maximum, that outlines that. Is that agreed? Yeah.
The one thing I'd maybe add too is, like, instead of saying, no, I don't have one, you could say, I'm actively looking for a lead investor that's the right strategic fit for my business, something like that too.
Beautiful answer. Wow. Yes. Yeah.
Yes. Thank you.
Okay. Great. Okay, I'm gonna move on so we can get into the breakout rooms, but just a couple other ones. And Chelsea, I'm gonna have you take the lead on this one.
Yeah, so you could be peppered, in these long conversations and due diligence with something you might not know. So would love to kind of throw it out to the audience that what do you do then? Or if you have an example of maybe some time that's happened to you and what you did and learnings to kind of share with the group.
I can share.
Yeah.
I learned from, I guess, answering a question that I didn't know the answer to at one point in my career. And I was given feedback to say that, like, I'm not sure of the answer right now, but can come back to you once we look into that, or to say that this is already on our radar, to say that we've been thinking about it already and we're aware of it, but don't have the answer just yet.
Okay. Yeah, fair. Sydney, do you want to add something?
Well, that took my answer pretty much. That was exactly what I was going to say was, you know, just admitting when you don't know something seems to be the best way to build rapport, because exactly as you're all saying, you don't have to know everything, but to say then, but I will find the answer, or I'll get back to you when we've decided that, or something along those lines, shows that you're at least aware that you need to find the answer. So that's what I have been told / tried to practice.
Yeah,
Sorry.
I agree with that too.
Yeah.
And just one thing, depending on what the question actually was that you didn't know the answer to, you may want to try and find out how important it is. You know, because if it's something that's going to require a lot of research, but the person who asked it didn't really care anyway.
Yeah.
You know, so maybe not challenging them on whether it's important, but asking, you know, would you like me to follow up after the meeting with that? You know,
yeah.
And if they say no, that's okay. You know, you may not need to do the work.
And taking every, you know, something you don't know as an opportunity to learn for the next conversation you have with someone too. I've had an instance where a founder, we were asking more about maybe their weighted sales pipelines to try to get an idea of, you know, how many customers they potentially have coming in. And they're like, what's a weighted sales pipeline? We're like, okay, we can explain that and walk you through it. And they're like, oh, I have that. I just hadn't heard it like talked about it like that before.
Sophia, sorry.
Yeah, just like another question about that, and again, depending on what the question is, would it be okay, like if you can speculate, but just make yeah, just come up with an answer, obviously communicated that you are not sure, but based on what you know, this is what you think could be, or is it better to just refrain from saying anything and just say, I'll come back to you with an answer? Like, what's your opinion about that?
I'd say it depends probably on the question and your comfort level with the response too. You don't want to be just making something up, but if it's like somewhat educative, then yeah, but it's not a bad thing, I don't think, to be like, yeah, that's on my roadmap, or that's, you know, coming. Not every founder is going to have an answer to every single question, and like nobody does. So
yeah, and I think the other part of that though is making sure you do get back, and if you can get back, you know, within 24 or 48 hours, so that you continue the conversation as quickly as possible. Okay, great. I just I'll leave it. This is sort of, we've got some time here to ask some questions. I know I'm running a little late, Katie. I'm watching the clock not as well as I should, but any sort of broad questions before we take a break and then get into the breakout rooms? Yes, Michelle?
I'm having a little bit of a hard time just wrapping my head around, because my knee-jerk reaction when I'm asked a question is to answer it directly. So how do you change that mindset where you're thinking about, well, is this a prevention question? Because you're you know, when you're in an investor meeting, you're crushed for time and you only have 5 minutes, and you know, so what is the right way? Is it just through practice, or are there some tips and tricks that you can do?
Practice. Get people to throw hard questions at you and practice turning them around. Because it's really easy if you just answer to make your opportunity sound smaller and smaller. Even if it's not, just because of the way people ask questions, and if you just answer them. So that's where, you know, you're selling your business to the investor, And you need to think about that. You always need to think about, how can I turn this, how can I make sure that my answer is showing my passion and my opportunity? And practice, practice, practice. Because it is hard. Like, it's for many people, the default is, I'm sorry, some echo just showed up. Yeah, for many people, the default is to answer what you were asked. So.
And you could maybe tip to practice it too, like use Chat GPT and be like, give me a list of defensive and promotional questions a VC might ask. And then you can like see the difference between the two and just practice kind of answering it that way.
Thank you.
Atina.
Okay, to add to that, normally I take some time to answer any questions or emails or something like that. But when I need to answer immediately, maybe I share some points, but after 10 or 15 minutes, I'm like, I need to add that point as well. So when is the right time to get back to that answer? Maybe at the end of the questions, or is it a good thing to do or no? Could you please just let me know?
I think every VC is different. I appreciate follow-up from founders after. It keeps you top of mind. I would say, like, I'm sure I'm not atypical in this, but I'll probably get 100+ emails from founders daily almost. So like sometimes having, a bit of a nudge and reminder is not a bad thing.
But are you talking within the pitch, like after the pitch?
Yeah, after the pitch, for example, exactly. After the question, maybe after 2 or more questions, I'm like, I needed to address that as well. So I don't know whether I should let it go or just.
Yeah, let it go.
Forgotten about it. Yeah.
Now you could do a follow-up email, right? If you send a follow-up email back to the coordinator, the ED, the executive director, you could say, oh, I wanted to add this. Could you share it with, the people in the room if it was a deep dive, right? So that you could do that after. And it's a nice follow-up to send back to a group of investors. I forgot this. That's very real. That's very human to, want to add something afterwards. So
yeah, so I would do that if it was a deep dive or the due diligence. But on a pitch, your goal for a pitch is to get the next meeting.
Okay.
So coming back with a detail later, you might lose the forest for the trees.
Okay, true. Yeah, good point. Thank you so much.
Okay. So I'm gonna just touch on this one here too, though, before we switch off. What should I do when I'm dealing with an overly negative or disruptive investor?
Has anyone had that happen to them?
Yeah. Anybody? Somebody's disrupting the discussion.
Not investors, but maybe someone from an incubator or a couple of years ago, and it was noticeable that we were accepted into the program, but it was noticeable that there was some friction with maybe the idea, or maybe also like I felt it was also that I was too girly in a way, like the company, the name of the company, our social impact, and so that was
How did you deal with it?
I ended up just removing myself from the situation. I just said thank you, but I didn't think it was a good fit, like the company with the program, and it was all like very friendly, but it was taking a toll on me, and it was just like a couple of weeks, but it wasn't constructive. Yeah.
Mm-hmm. I think you're just got your hand up from last time. Okay. And Sydney, do you want to tell us about a situation and how you dealt with it
Yeah, I had someone who I was speaking to them at like a very intro level call, and he said a couple of times, he said one time, he's like, you shouldn't ask me that. It's a red flag that you're asking me that question. Like, you should know the answer to this. And I disagreed. But I said, oh, thank you so much for the feedback. I'll keep that in mind. The way that I handle conversations where either clearly they do not understand what we're doing, or they're clearly uncomfortable with female founders, is I just say, you know, thank you for your feedback, and move on, because I don't want to work with someone who isn't going to give me the grace and patience if they consider me slipping up. Yeah, I would want someone who's going to be a little bit more considerate than that. So I just say thank you so much and move on.
Yeah, that's good advice, Sydney. Thank you. I'm gonna pay all. If it's okay, I'm just gonna see what Chelsea and Jennifer have as feedback and recommendations on dealing with an overtly negative or disruptive investor.
Yeah, so I've been in the room for this a couple of times, and I've talked to founders that have had this happen in other rooms that I wasn't in several times. I will tell you one thing, having been in the room, one thing that does not work is getting into a debate with the investor. It may feel satisfying in the moment, but you know, you've got one, you know, typically like in the situations I've been in, it's been one investor. The rest of the investors are actually generally sympathetic with you if the one investor has gone slightly off the rails. But if you start to argue with them, you can lose the sympathy of the rest of the room. So, you know, the thanks for your feedback, hadn't heard that before, that Sydney gave, or, you know, would be happy to explore this more. Maybe we should take it, you know, offline. You know, something like that. Hopefully some other investor in the room might help you out.
I expect it, but it doesn't always happen.
It doesn't always happen. But you do not want to engage in a debate that spirals into an argument when it's in a room, because if you handle it right, you might still lose that investor, but you could gain the rest of the investors in the room. They become more on your side. You know, so diffusing it, taking a deep breath, keeping in mind that this is not about you. These things are never really about you. They're much more about the other person than they are about you. You barely know these people. You know, you've been with them for minutes. You know, so keep that in mind so that you don't take it too personally and you don't get hooked into the argument or the debate.
Yeah, exactly that. Just don't internalize it, kind of move on to the next. Not every investor is going to understand your business or be the right fit for you, and that's okay. Then you just like move on to another two, but you don't want to like burn any bridges with maybe other people that are in the round, or maybe that investor is going to be in your next round. Who knows, right? So kind of go out there, prove them wrong as your business grows, but keep, you know, options open.
Feel free also to have an advocate in the room, right? It is possible to, you know, make it to a members meeting, but you've developed a relationship with one of the angels in the room beforehand. That is a great way, because then you have a personal relationship. They'll help you more often than not. And there are circumstances with some of the founders where I've been in other angel group meetings with them as their advocate, and that's possible as well too. That's a pretty special thing to do, and it doesn't happen very often. But if you know, you can develop a good relationship, that can get you a long way as well too.
Yeah, and if you're in the physical room, if you do have that advocate, sometimes you can make eye contact with your advocate to say it. If you're on Zoom, you can use the chat to see if your advocate can help you out as you try and diffuse or disengage from the investor that's being disruptive.
All right, I'm going to leave it here, and I'm going to suggest. So we're gonna go into the pitch breakout rooms. We're gonna all step away from the computer. I'm going to take it down to 15 minutes per breakout room, so that we can go rapidly through those. But why don't we all step away for 5 minutes and come back at 12:55, and Katie will split us up into different rooms, and we can get into some more discussion. Okay. So let me just give you the premise of there'll be 3 rooms. And once we get started again, the first room will be Jennifer, who will be working on these promotional, turning questions into preventative questions into promotional answers. That's her focus. Chelsea's going to get into the finance, CAC, MRR kind of alphabet soup questions there, metrics in particular. And I'm going to be working more from a technology product roadmap. What's your tech stack kind of questions? Okay, so we'll rotate through, and you'll all get an opportunity to go through all 3 breakout rooms. Excellent. 5 minutes. We'll see you at 12:56 now. How's that sound? Bye.